Hello everybody, welcome back, good morning. We're going to make a quick video on Algorand, and then maybe I'll make a few videos over the next couple of days, because I'm going to be away, you see, again, because that's what I do now, I just go away all the time. Which means that I probably will bring my laptop with me, but it's not going to be very good, so unless there's something very important that's taking place and everybody needs an answer, I might just sack it off really for the next few days. No videos, I'm not really sure, see how I feel. It's not even about that, so if I even have capacity to make the videos. Right, so this is Algorand, since this huge big rally that followed the XRP boom all the way from basically 0 to hero, 10 cents to 60 cents. That's really good, isn't it? That's a really good move. And then what happened? Well, I mean, it is cryptocurrency at the end of the day, and as a result of that, it does have to retrace a little bit. A consolidation is normal, 76.5% normal. So, I mean, it's not uncommon for Algorand to do something like this, nor is it uncommon for many altcoins to do things like this. We rallied at this point from 8 cents to 33 cents, and then from 33 cents we sank all the way down to 9 cents again. So 70% retrace over there before this happened. Now, I've been saying this for a little while, like XRP is still a good chart, and any of the XRP, I don't know, copycats, if you want to call them that. I like Algorand, I've got loads of it, but I don't know what you want to call them, but they're all in the same boat. What's good for XRP will be good for Algorand, XDC, XLM, HBAR. They will all benefit, right? But beyond that, they do have their own charts, and obviously, XRP did extremely well. Algorand did extremely well. XRP held its value. Algorand did not. It's a liquidity issue, if anything. So what you'll notice is that these small caps, and again, they're not small caps. Someone will go, the market cap, the market cap, the market cap. So yes, it's a market cap of what? Cryptocurrency? Come on now. We're not talking about bloody Apple stock. The market cap goes up and down like a bloody yo-yo. Don't give me this market cap. Right, hang on a second. The market cap. Anyway, yeah, the liquidity. Like I always say, green candles, red candles, they're a reflection of emotion. They're a reflection of the speed of buying, basically. Money being poured into or being drained out of a chart. So, just like a Ponzi scheme, right? If you're at the top of a Ponzi scheme, you're the first person in. Anybody else on top basically fills your pockets. That's what happens with a chart. So if you're down here, I'm not saying this is going to rally or anything like that, but you're down here, the trading volume is around about 10 million, maybe 20 million, in 24-hour trading volume, even after the most recent price action. And that's not really much at all when some of these charts like XRP trades over $1 billion sometimes in 24-hour trading volume. When the parabolic moves happen, a few million is nothing. Billions, some of these, the top caps get billions now, hundreds of millions for the others. So you'll be at the top of the Ponzi scheme, and you will get a move like this. But, is it going to be done on its own? Let's have a little look. So we've got all these drives of bullish divergence that eventually, like a broken clock, we will eventually be right twice a day. It did get hit and then bounced, and now we've hit the trend line, this descending trend line. It's below the 50, simple and exponential, 200 and exponential. All of these are death cross retests. So if you move up and break from this, you got one move here at 21 cents, and you got another one here at 24 cents, another one here at 26 cents, and another one here at 27.5 cents. That's just your daily. But look, I mean, it's better than just continuing to go down, isn't it? It's not the worst thing you've ever seen. The weekly just shows the same sort of scenario, but also giving us a 29 cents resistance as well on the target there. And if we move to the monthly, we're pushing the center of a Bollinger Band, the 20 monthly. Now, this is quite good because it means if we do break out of this one, it probably does go for a nice big rally. 29 cents, maybe into the 30s. That's what the monthly suggests. So I'll have a little bit of that. Now, if we move over to the 4-hourly, this is where things are looking a little bit more interesting, but also not particularly hopeful in the short term. Like we've been saying over the last 2 live streams, move up into the Bollinger Band, buy the dip. Up into the Bollinger Band, buy the dip. Break out into the Bollinger Band, buy the dip. Up into the So here we are again, getting rejected this time round. A few drives, bearish divergence at a major resistance. What else do we have? Well, these are the things we've been waiting for as well. We've been waiting for these pump signals. We expected a lot of them to happen by Tuesday, and here we are, Tuesday. We've got a pump signal on a 4-hourly. Bang. Right, so this means that the pump signal is already in play. If you pull back, you look for a ricochet and a bounce from that. The bounce could take place at 18.7. It could take place 18.2. And then that bounce should be enough to take you to the previous local high around 21.5. So I like it, right? A little bit of a pullback, maybe. If not, we're already seeing it. And then bounce short-term target 21 cents after that. I know what you're saying. 21 cents. That move is 60%. I'm not getting out of bed for 16%. It's cryptocurrency. You don't need to get out of bed. I'm already out of bed, and I'll take the 16%, thank you. But other than that, I might as well just leave it with you there. There's nothing much more to say. The market is the market. It looks relatively good, I have to say. It looks okay. Everything I've said over these last few weeks still applies. Just be cautious of the resistances on the S&P, but until we get there, probably creep up to those areas. Right, thanks for watching. Hope you have a nice day. Take it easy.